The Hustleshare podcast is sponsored by One CFO, the Philippines' leading fractional CFO services provider for startups, scale-ups, and SMEs. Experience the power of tech-enabled, efficient, affordable, and expert-led fractional CFO services. Let One CFO handle your finances so you can focus on growing your business. Book your free CFO consultation today.
And what happened is those early stage funds no longer were early stage because victims of their own success, they raised larger size funds.
Correct.
Now they don't want to write the small check anymore because they have a larger pool of capital to deploy. So instead of writing that $200,000 check or that $100,000 check, now they want to write a $2 million check or a $3 million check.
Welcome to Hustleshare, the podcast that features the daily grinds of unique hustlers around the world to show not our differences, but that our hustles are very much alike. Now here's your host, Ronster Baetiong.
Welcome to the latest episode of the Hustleshare podcast. I'm super duper excited because I've been seeing this guy for the past couple of years in the beach in Cebu, right? It feels like a deja vu every single time, but I've been wanting to get him on the show and it's just super difficult to find a common time. And I've now finally able to find out and reach out to tell the story because he's one of the few, not just investors from the region that still shows up in the Philippines, but are actively supportive of their portfolio. And whenever we see amazing regional investors like that, we gotta have them on the show. So without further ado, let's welcome to the show the managing partner and founder of Indelible Ventures, Mr. Kevin Brockland. Woo-hoo! Welcome to the show, Kevin.
Very cool. Thank you for having me. I'm glad that we were able to organize this and find a mutually acceptable time.
Absolutely. And again, this is a very, very interesting topic because it's been a while since I've had a VC in the game, right? I've had VCs in early 2019, right before the pandemic. I've had VCs during the pandemic where interest rates are zero and it was just a race to just basically invest over everything. And I've had VCs also visit the podcast during the winter. I don't know what it's called now, but it's pretty dry. It's arid, right?
Yeah. The winter has been very prolonged. I feel like we still see White Walkers every once in a while.
Absolutely, the Night King is alive and well. Hasn't been slayed yet, but again, we need to get to again. Well, I'm excited to talk about what the VC world is now in Southeast Asia and also the startup world. But before we get carried away, I need to ask you the $1 million question. Kevin, what's your hustle?
I mean, to be honest with you, my hustle these days is just trying to be an active, positive contributor into the startup ecosystem. It's a lot of work, spanning across the region, but really focusing on a couple of the geographies that I think don't get as much attention as they deserve, but where there's a massive amount of opportunity, and that's Philippines. It's also Thailand and Malaysia, where I'm normally based at. So you're probably seeing me country hop on a regular basis. I probably do like a week a month in each country.
Nice.
So I'm pretty active. That feels like a hustle with the amount of time and energy that goes into it. But the day job is the investing side. But those go hand in hand.
Definitely, and I love how active you are, and that's one thing that I don't see a lot of venture VCs do now. I mean, once upon a time they were also like that, but I still a couple years in, and I still see you show up, and that's
everybody still says it. Right. Not everybody does it.
Yes, that's true. The fact that I've seen you in the flesh, shook your hand several times already, a couple times over that says a lot. But before we get carried away and talk about the VC ecosystem now, startups and all that, because there's a lot of things burning questions I want to clarify and I want to get your opinion on. I need you to buckle up real quick because we have to go all the way back to Missouri and talk about how you started out, because we're going to have to ride the Hustleshare time machine. All right, we're now in Arkansas and boom, right there. Okay, we are straight in the
right.
Midwest. And again, super duper interesting. I remember a conversation in Goab just this year.
Yeah.
And I butchered every single answer, and I apologize if I butchered every answer. And you asked me, I profoundly remember this. It's like, hey, where do you think I'm from? I'm like, Ireland. I'm like, nope. Like, where?
Nobody ever guesses. Nobody ever guesses.
Absolutely.
I think my accent has become so disconnected from years and years of living outside. But yes, in fact, I am from Missouri,
Right.
or as we lovingly used to call it, the state of misery.
Yeah. Wait. Hey, Missouri is beautiful, man. Barbecue in Kansas City.
Yeah.
Is and the fountains out there. You know what I mean? University of Missouri is beautiful. St. Louis, beautiful.
Yeah. We got the Ozarks, which got their own Netflix show about them.
Yep, absolutely. If you want to master or have a pregame of how money laundering is done properly for the cartels in Mexico, watch that series.
That's why we're called the Show Me State.
Oh wow. No, but Kevin, I want to understand what it was like. Again, Midwest, very profound, and a lot of people. I've seen tropes of this, and I'm not gonna generalize, but a lot of people in the Midwest, I think there's several tropes that I've seen. I've seen people who just really love the Midwest and just stay put. They love it. They probably hop around, but in the end, the Midwest is home. Chicago, Illinois, Indiana, whatever, Midwest, right?
Yeah.
And then there are people that's like, hey, I love the Midwest, but I'll venture out. What was it like growing up in the Midwest? And what was the first exposure to hustling that you remember?
Yeah, so I grew up in a little bit more of like a middle of nowhere. We were one of like the first subdivisions out in the rural area. So it was like before our county really developed was when most of my like formative early childhood was. So it was much of like walking through the woods and just exploring middle of nowhere.
Wow.
So I think that to be honest with you, kind of developed a little bit of wanderlust in me. I like rural, don't get me wrong. I've been living in cities for a long time. I have to reconnect with nature from time to time and get back to those roots of me. But ultimately, like I always kind of had that explorer blood inside of me. And then on the first exposure to the hustle side, I mean, I remember times of going to the convenience store and buying bulk bags of candies and then reselling because the convenience store, the machines in the schools, they would only sell the full size candy bar and it's expensive. Whereas you could go and buy a bulk bag of the snack sized, it's like a Snickers bar or whatever sort of candy. And I can take that bag and start selling that.
Wow.
So I did that. The school did not like it ultimately, which I took very much offense to because like that's very anti-capitalist that they want to shut down competition. Which considering it's a red state, I thought that argument would have played better. But the fact that I was 10 years old probably weighed more into it than my philosophical view on being entrepreneurial. But that was probably my earliest experience. And then from there on out, like I was always much more of like a what can I do? How can I sell? Right. How can I earn a buck? Sometimes for good, sometimes for bad. But it was like perpetual in me, since early days.
Amazing.
And in a rural area, you kind of have to. There's a lot that still can be done there. And I'm old, so like we were also like pre a lot of tech, in those days.
Right. It's just good old, American living or Midwest American living. But I want to jump on now to the college. I'm looking at it, and you went to the East Coast, went to Seton Hall. What was that like, and how did that open your eyes to like the world of business? Because if that's ingrained in you that are trying to try to hustle and try to make a quick buck, what was college like?
So I'll tell you a quick preview story that kind of sets the stage for that. So I did my grad school at Seton Hall. When I was in high school, I was actually one of the top students, but I was always bored. And I don't know if you've ever heard this, the saying, idle hands are the devil's playthings.
Absolutely.
I got into trouble. So ultimately what happened was my last year of high school, I was invited not to return, which is a nice way of saying I was kicked out. And here I am, basically in position to either like be the valedictorian or the salutatorian, because I'm like one of the top students in the school.
Right.
Meanwhile, I'm like the guy that sleeps through class.
Oh, man.
And yeah, because of that, university became hard to get into. So I lost a lot of optionality in my life. As a result of my own bad behavior. So I had to make things up. So what happened, instead of the traditional undergraduate life that most people have, where they go away to school, you get a nice scholarship, you go away to school, all of those sort of things. I didn't get that. Instead, what I got is a full-time job and went to night school. From then on. So like I had jobs since probably I was like 13.
Wow.
Technically, legally, I think it was 15.
Right.
But I worked full time. And then I went to school at night, and then I did an overnight shift at a hotel, until I would have to wake up and go back to my morning job at 7 a.m.
That is crazy. What type of jobs are these?
No, so I was a service consultant with an automotive firm during the day, and the overnight at the hotel was I was like the on-call person. Nobody checks in at 3 a.m., but they need somebody on site. So normally you have to be the one that's like doing some of the grunt work, but I basically just would use that for my sleep time.
Nice.
But yeah, so anyways, my last year, now I've got some pretty good savings because, I was hustling at that point in time. I had some side gigs. I had this and that. Plus I was just like working like crazy, trying to make up for my own stupidity of the earlier age.
Right.
My last year of university, I said, I'm going to go study abroad for my last year of university.
Wow.
I had never stepped foot on a plane until that point. Like I'm like a bubble in the middle of nowhere, Missouri sort of boy. We would rarely ever, like, I think we only left the state maybe 3 times on holiday when I was growing up. We were very sort of like, not very exposed to the rest of the world.
Right.
And this after the story of my wanderlust that I gave you.
Okay.
So I go abroad. Do a couple of programs. So I did a stint in Ireland. I studied in Amsterdam, did a stint in Vienna, Austria. And ultimately I'm wrapping up with that. My undergrad university is coming to a completion. Now I got to figure out, like, what do I actually want to do? Now I've been working for years and years and years at that point in time. So the idea of coming back out and going straight into corporate job again, was not super appealing.
Right.
So I thought I would delay the decision. So instead of coming back, I moved to Mexico.
No way.
I took an intensive language program. So I learned the language while I was living there. Ultimately didn't make it through the entire program.
Okay.
I left because I said, I'm a young single man. What's a better way to learn the language? I'm going to go try.
Yes, sir. I know what you mean.
Exactly. The best tutor has 2 legs. So
depending on which town in Mexico did y'all do in Juarez, Tijuana?
So during that time, I basically traveled the entirety. I've been to every single state within Mexico. So I basically backpacked around that country.
Even Sinaloa?
Everywhere.
What?
Everywhere.
That is crazy.
Everywhere. At that time, it was safer than it is today. Okay. Today, the security situation is worse than at that time.
Yeah,
there was always the same problems, but they kept it amongst themselves.
Right.
It never veered into the rest of society until more recently. So, anyways, then I wrap up with that, and I decide I'm going to go to grad school.
Got it.
So now it's a matter of where. So I wanted to get outside of my bubble again. So ultimately landed on Seton Hall for a couple of reasons. One, they had a dual degree program. So I was going to do an MBA in finance and a master's in international relations because I got bit by the international bug after these couple of experiences. And I was fortunate enough as well that they gave me a graduate assistant job, which paid my tuition and gave me a monthly stipend.
Wow.
So, me being the frugal person that I am, that made a lot of sense. And proximity of being on the East Coast. Initially, I thought I was going to go more of the route of like development finance agency, that sort of thing.
Yep.
But as I started studying more, I became more focused on. I was always quantitatively inclined, so I became more focused on a lot of financial products, all those 3-letter acronyms that became toxic in 2008 financial crisis. Man. I was studying those in 2006, 2007, thinking that I was going to graduate in 2008 and get a job doing that. But guess what? Nobody wanted to touch any graduate in 2008 that had anything to do with
the worst timing.
Yeah. I've got a lot of stories of bad timing, and that was definitely one of them. So it was a challenge to recover from that setback as well.
Right.
The career plans were knocked off a rail.
Uh-huh. Now, after that, what I want to understand is that, all right, you're now in finance as well, right? One of the worst timings, because obviously the finance, the whole market crashed, right? The Big Short happened, right? Yep. Now what I want to understand is that obviously you've accumulated so many skills just being around the world and whatnot. What was the next step that you took on in order to really catapult you into that, considering that it's really not the best market that to be in this type of job per se?
Yeah, so 2008 is a situation where the job offer that was in the pocket gets rescinded.
Oh no!
No longer exists because they're doing layoffs. Everywhere's doing layoffs. No one's hiring. So now I got to figure out where can I go because it's 2008, and so I ended up landing a job at a boutique brokerage firm on Wall Street. My window literally looked out at the stock exchange. So like address wise, it seems like it's good. But man, I hated it. It was the worst, and I didn't last very long. So the quick version on what happened there to make me leave that job, because I think I lasted maybe like 2 or 3 months.
Right.
So I had brought in what was going to be a giant commission check for me, right?
Okay.
So like I had done all this prep. And the guy wants to meet my boss. So it's time to like me being the junior guy, bringing him into the office, introducing him to the boss, all of that. I had like prep sheet for my boss in regards to these are the questions that you should ask. Like I basically tried to make it as simple and clean to follow as possible, like as foolproof as possible. And what happens? My boss did not look at any of that. He comes into the meeting. He asks stupid questions. The guy gets pissed off, storms out of the office. And then my boss then proceeds to try and tell me that I was the problem.
Are you kidding me?
My youth and lack of emotional control at that point got the better of me.
Did you choke slam him?
I did not. I did not go full crazy. But I basically told him that that I was going to leave, and so I quit basically then and there. And yeah, terrible time to quit a job. While everyone is getting fired, I'm dumb enough to actually quit a paycheck.
Right.
In one of the most expensive cities on the planet.
Yep.
But fortunately, I was then able to get another job with a company called Tiger Capital, working in the distressed asset space, which was one of the only booming sectors of the finance industry. And that was, to this day, I think the boss that I had then was probably the best boss that I've ever had in my life. Like as far as like impact on my trajectory, shaping my frame of thought and how work should be. And that was probably one of the turning points that put me on not necessarily the same investments that I'm doing today, but on the track that led me to where I am today.
Right. Last question before we take our first break. What Tiger is one of the best companies that are here. I remember when they first invested here in the Philippines during the pandemic. I forgot was it PDEX that they invested on? I forgot one of these companies that they went Series B or Series C. It's either PDEX. I think it was PDEX that they invested on.
Yeah.
And again, when we saw, oh my God, Tiger's here in the Philippines, everybody's minds were blown, right? But what is it like working in Tiger? And again, well, talk to us about the learnings that your mentor taught you, and how would you say that it helped the trajectory of your career being in Tiger during that time?
So the space that I was operating in was on distressed special situations. We did a lot of advisory work for banks because of that. So it was extremely high volume.
Like bailouts? Are we talking bailouts?
Not really bailouts, but like buyouts, turnarounds, asset disposition. So like if you think of every major bankruptcy and liquidation that happened in the US at that time period, we had some fingerprint on that situation. I was always on the wholesale and manufacturing side.
Okay.
But like the big names that most people recognize as big bankruptcies in the US were like when Circuit City went bankrupt, when Blockbuster went bankrupt. Our firm tried to buy Blockbuster. We were not successful. We actually paired up with Carl Icahn trying to buy that one. We were not successful with it. But that was the space. So I was doing maybe like 60 transactions a year. During that time period, which in any other area of finance is like obscene. It's like it's crazy amount.
Yeah.
And so I became a workaholic and became very accustomed to flying around the country because a lot of ours was I was primarily around North America, which was mostly US and Canada. And so a lot of it was flying around, meeting management teams, going to do site visits, looking at the companies, working on my laptop from airport to airport to hotel to taxi to office, then repeat and repeat and repeat.
Wow.
But like the positive out of that was when I would talk to my boss and I would say, I'm going to take a holiday or something like that. My boss's reaction was always like, you don't need to tell me. The only thing he cared about, he didn't care about the FaceTime that I spent inside the office. Like some companies in the finance industry was like, you need to show face that you're there.
Right.
Show up before your boss, leave after your boss. And it's an act. My boss, on the other hand, said, there's one thing I care about. Is the job done or not? And it needs to be done well. If the job's done well, I don't care. If I have to question you about how much time off you're taking, time off is not the problem. It's the job getting done is the problem.
Got it. Amazing. I love that. And that forces you as a person to really be responsible and be proactive, right? Because the freedom that you get, I mean, he doesn't care. So
I'm out in the field the majority of the time. So like I have to have that independence in order to make sure that I'm pushing my own projects through and that I have the leadership in order to actually manage all of the different tasks and projects that are going on.
That is amazing. Now let's take our first break. And when we come back, we will now continue that story of how you then grew within Tiger and obviously how you got into your next few hustles in DC and Malaysia and obviously all the way to creating Indelible Ventures. Well, let's talk about that more after the break. Hey, hustlers, ever feel like your money's flowing in, but your profits are nowhere to be seen? Is managing your cash a constant source of stress, leaving you anxious about day-to-day operations? Or maybe you're holding back on growth because you're unsure if your finances are really stable. The real problem? You don't have a clear picture of your finances. Without a strategic financial partner, you're basically operating in the dark, always one step away from hidden pitfalls. But what if you had a seasoned fractional CFO who understands these challenges and gives you clear and straightforward steps to increase profits and grow steadily? without the cost of a full-time CFO. That's what One CFO delivers. One CFO combines the strategic thinking of experienced CFOs with their own cutting-edge CFO tech platform, giving you transparent, real-time insights that empower you to make smart moves. They're the go-to fractional CFO partner for growing companies like Quick Insure, Avion School, J Labs, Advance, One Lot, Colorette, and Stash, helping them conquer financial challenges and achieve remarkable growth. Imagine having a crystal clear view of your financial performance and the confidence to execute bold, growth-driving strategies. Ready to level up? Click the link in the description or go to onecfoph.co. That's onecfoph.co right now to book your free no-obligation consultation. Gain clarity in your finances and grow your business with confidence. Click the link or visit onecfoph.co today. And we're back from the break. We are still with Kevin Brockland and told us the worldwide journey he's done, going from middle of nowhere, Missouri, or boondocks. Do you know that boondocks is a Filipino word?
I did not know that.
Yeah, boondocks is a Filipino word that means boondock means mountain. And the GIs during the Second World War brought it home and called every rural place in the world boonies or boondocks.
All right.
Yep. Thanks to the Philippines.
Nice origin story there. Learned something new from this.
From the boondocks to the world, all the way to Tiger Capital. But what I wanted to understand before we go to your next hustle here, when you analyze companies, it provides a separate lens because this is very much the hustle that you'll eventually get into every single time, right?
Mm.
And I credit Insignia Ventures Academy during 2022 when I was trying to fundraise for them. England, the infamous England, told us, hey, I'll make you a scholar. Join this so that you can see what's the process of being a VC like? How do you analyze companies based on data? Of course, there's going to be some quantitative or qualitative, like the founder, market fit, and whatnot. But at the end of the day, there are rules and what that you have to look at to really see if this investment will give you the return that your LPs are going to be happy. Not your personal biases, because at the end of the day, as an analyst or whatever you call yourself, you're beholden to investors or high net worth individuals that invest in your fund, and you're promising them very high risk, but also very high return if you are right. In a market where it's super volatile and it's a how do you even call something beyond the bull market, right? Beyond the bull or lower than the bull, where everybody is just trying to go liquidate and just do cut loss. How do you win in that environment? And what are the type of metrics you look at of what's worth it to pursue and what's not worth it to pursue? Because this is a precedent of how you're eventually still look at businesses down the road, but through an investment lens.
Yeah. So when I was doing distressed, it's a very hard time because like the sky's falling,
Yes.
and so like everything is collapsing around you. So what you're really trying to understand is, can you whittle things down? Can you cut the fat and keep the muscle? But the challenge is that when times go bad, your best employees are the first ones to leave because they're the ones that have the most amount of options. Yeah. They're going to go to the company that still has the balance sheet strength. They're going to end up jumping ship. Like you very rarely see the best go down with the ship. So when you come into a company, you're oftentimes, and this is going to sound very, very bad, but you're oftentimes left with the folks that have no other option. Right. Or you're left with the folks that, if the company has a very strong culture, maybe you have some of the best people still because the culture was so strong that they stuck it out.
Right.
But the other aspect during that is like what we were looking for is how much salvageable is there left in this business? What are the pieces that are durable? Where are the margins at? You're also trying to assess where things went wrong. And so I think that assessing where things went wrong is probably the area that is most applicable to what I do today. Because today I'm investing in B2B tech startups.
Right.
And because I've seen hundreds upon hundreds of companies that went wrong, I've got so much pattern matching from understanding the pain points, where things happen, the operational flow from different departments. Because again, I'd walk into a company and all of a sudden I'm having to take over or understand 15 different roles across an organization.
Right.
And so it really shaped. But ultimately, the vast majority of instances that we would see, you can't save the whole. So you kind of got to figure out the surgery required in order to save something.
The vital organs.
Do I have to amputate this arm in order to save the body?
Right. No, I love the analogy, because at the end of the day, there's still value there. And if you can find it and you got to turn around, slower pace, that's what it takes. And again, it's very reminiscent of how startups are operating now.
Yeah.
Where
but we did do some organ farming. So we did just kind of rip it apart and sell it for pieces.
There you go. Again, there's still value there. But if you in a perfect world, in a distressed company, if you can find a way to be in survival mode first, as long as you still have a pulse, then there's a better option. It's very, very similar to how startups are operating now in Southeast Asia. It's in the Philippines. All right, we went from grow at all costs in 2021, 2022, probably tail end of 2023. All of a sudden, okay, there's no more checks to keep growing that. Then you're going to have to really pivot into different metrics. We had to go through that, and my God, the amount of times we almost died. It's crazy. And I also had my co-founder pass away suddenly, and I was there.
Oof. That's rough.
It's rough. But what I'm super proud of is that our culture held through. Our best guys stayed put. And that's why we were able to turn around this year, despite having, say, 3 years of going, negative growth. We bounced back this year 3x in 1 year. Because we now master the things. And I hope a lot of startups go through this. And we all have different things, but culture is such an important piece. And obviously finding the metrics and trimming down the fat and making those decisions at a timely manner. Because if you get cold feet, hey, I don't want to get rid of this shit, blah, 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 that can be life or death right there.
Yeah. And too many folks, when they're making cuts, have a tendency of cutting into the muscle. So when you go into survival mode, you do have to be very cautious about losing the muscle that will give you the strength to come out of the other end.
Right.
Getting rid of the fat, fantastic, trim down, become lean, focus on the optimization of all of that. But everybody needs to be really focused on what's that core that I'm trimming back to, and make sure that it's a survivable piece. Right. Because you do much better financially, whether you're the founder or whether you're the investor side like me, off of a going concern business, something that's still growing, still surviving. Selling for pieces is generally not the most financially rewarding.
No. I've been my first startup failed, and it's the most gut wrenching. So that's why I know exactly now what it would take to be super lean, 0% body fat, but still have enough muscle for you to be able to play offense. Yeah. And there's no right or wrong answer into this, but it's really understanding your core metrics and really understanding what it would take for you to really take 1 step back, but 4 steps forward, rather than having 2 steps back and then that's it. You're dead.
Yeah.
Right?
At least today we have a lot more tools to be more efficient, so that we can kind of have that 0% body fat while still doing the job of 10 people.
No, absolutely. And AI is the biggest equalizer on that, right? Yeah. And the timing of it, again, how fast you make those cuts, they're going to be hella painful. It will scar you for life. But if you get cold feet or you drag your feet to this, it might as well just kill you. So
yeah, it's very hard for people to do layoffs. It's not like any founder that has had to fire somebody, even if it's just one person. It's not easy. And the news stories have been flooded with people that have done it very badly. I'm sure people have seen the story of the big tech startup that ended up doing it over a Zoom call to 250 people and being like, sorry guys,
Yeah. No, it's inevitable. And here's the thing. So that's why I always say to fellow founders that if you're fortunate enough that you haven't had um, the forced way for you to be able to just survive by cutting people, don't make fun of people that had to go through it or look down on them, because that's the only way to survive. Because the worst thing that I always see here in an ecosystem is that, oh, I'm so lucky, I'm going to flex, I'm doing so well, everybody's trying to die. Dude, the tide will turn and you'll eventually have rainy days. And if you're going to be one of those dicks in the ecosystem that you think you're better than everybody else just because everybody had a bad hand, the people that would actually help you out, and I'm so fortunate because a lot of the people that help me out are the same people that had to go through what I had to go through, because they did it themselves. So these involve founders, investors, and everything else as well, to really help you navigate through really rough times, because it's virtually impossible to do it alone. And if you're in land, don't laugh at them, because eventually you're going to have to be faced with that same decision. And when you are, who helped you and who you look down upon will definitely matter.
Yeah. No, 100% agree. I mean, tables always turn. Yeah.
Absolutely. So I love that. Now, sorry, we went on a tangent there, but this is something I really wanted to do because it happens. Distress is a cycle. It's not like when you go through it once, it will never come back. It always will come rushing back. It's that scyther of death knocking into you will always going to be around. But let's just fast forward to Washington, D.C. and also how you got to Malaysia. In your next stint, what was that like in D.C. and how did you end up being in the Media Development Investment Fund in Malaysia?
Yeah. So basically what ended up happening is that after a while of doing the downside of the business on the distress side, I needed a change. I wanted to be on the growth story. I still had kind of like the heartstrings of wanting to do positive impact in the world. So I got involved with a global impact investor. So I was the portfolio manager looking out over 17 funds across 19 countries across the globe. I ran the global ones, that managed the managers on the rest of them. Really good exposure from a geography standpoint. So it enabled me to get into a lot of locations. When I came in there, because I came from the distressed background, they had a tendency of using me as like the firefighter that would go in and try and solve the problems that were happening with the portfolio companies.
Got it.
Which is understandable. Like if the shoes were turned, I'd probably do the same.
Right.
That landed me into a lot of interesting situations across the globe. I got a ton of stories of like, what's it like trying to turn around a convenience store in Tbilisi, Georgia. Or like when you have to fire a fund manager in Peru and the LPs hate you, how do you go in and try and solve that? Have some interesting stories coming from that. But ultimately what ended up happening after the years of working in that one is I was feeling disconnected from the direct touch points with the portfolio companies because I was corporate office. I was not in the field as often as I wanted. And so ultimately, after a number of years of being there, I made the decision that I wanted to relocate and actually get back into the field, the part that I find the most enjoyable.
Right. Mexico all over again.
That's what landed me in Mexico. The first place that I moved back to Mexico. This time I was not a single man. I moved with my wife. So no similar situation in regards to
and you're already, your Spanish is on point already by that time.
Yeah. I mean, my wife is a native Spanish speaker, so I still have Spanish language. But I moved back to Mexico to essentially run Latin America for MDIF, which was focused on media and tech. So that was, the one out of DC was much more of like a crossover before we started using crossover. Each fund had a different mandate. It was a little all over the place.
Right.
It was very sort of like frontier and transition economy. So it was a little bit all over the place. We did some ag tech, we did some tech, but it was mostly it was a bit of a variety. With MDIF, it became much more focused on early stage sort of activities, at least for my role. But shortly after being there, the woman that was running Asia went on maternity leave.
All right.
And so me being the new guy,
right,
and also having prior experience across the globe, I volunteered. I said, don't worry, I'll fill in until she comes back.
Got it.
The woman was based in Europe, so it's a 6-month maternity leave.
All right.
But then she just never came back. She didn't end up taking back Asia. So for like a year straight, I was running both sides of the globe, which is essentially like 2 weeks here, 2 weeks there, and then country hopping in between.
Man, your body clock must have been so messed up.
No, it was crazy. It was crazy. I used to joke that my wife forgot what I looked like because I was traveling so much. And ultimately that was an untenable situation. So I looked at the portfolio in LATAM. I looked at the portfolio in Asia, and I said, let's make the bet that Asia is going to be the future. And that's what prompted us to relocate into Malaysia. And Malaysia, in all honesty, was just pragmatism in regards to where we were going to locate. Because the key things for us with that was I needed connectivity of an airport because there was a lot of travel. My mandate was emerging Asia from the Middle East all the way through Indonesia.
Right.
And so I needed connectivity of airport. I needed a place that was easy for my wife to settle down to. And I needed cost of living because Singapore is just
super expensive.
Yep. Yeah.
It's KL is absolutely beautiful.
Yeah. So it made a lot of sense.
Right.
And we had been bouncing around for so much that I just kind of assumed that it was going to be a temporary thing.
Right.
Now we've been living there for like 8 years, maybe not going on 9, possibly.
Right.
And so it's been a long time that was here. But the experience with MDIF, so I got to know the different geographies around. I spent a lot of time in Indonesia. I saw the bubble coming from Indonesia.
Right.
I was sounding the alarms on it. When I launched Indelible, it was largely driven by some of the experience with that. And so just to kind of continue the narrative on the transition to present day, the idea on launching Indelible was really because I was seeing a number of gaps form in the startup ecosystem. And so like, if you flash back in time, it was really around like, I mean, it had already started in maybe 2015, 2016, but by 2018, most of the money in the ecosystem, especially the regional funds, they basically started ignoring all of Southeast Asia and became solely focused on Indonesia. It was like, you're either Indonesia only or you're Singapore plus Indonesia. And they stopped caring about everywhere else in the region. Yep. And it made no sense to me because I'm looking at it and questioning the logic of the thesis. But they became so overhyped with the 300 million population. Yep. Which is 300 million, but you're not really selling 300 million people. You're selling the cities and you're selling the economic strata in the city. Yep. And so like when you start segregating it pretty quickly becomes a much smaller number. Yeah. And so a lot of the capital was disappearing. So I saw the geographic gap that was happening. The second gap was that a lot of the funds that are here in the region are the same ones that were funded originally by the Singapore government, the ones that were those initially seeded ones. And what happened is those early stage funds no longer were early stage because victims of their own success, they raised larger size funds. Correct. Now they don't want to write the small check anymore because they have a larger pool of capital to deploy. So instead of writing that $200,000 check or that $100,000 check, now they want to write a $2 million check or a $3 million check. And while that sounds like a good problem to have, what happened was the early stage startups that are looking at that initial takeoff capital now had a lot fewer options. So we had a big gap forming at the early stage because the funds were vacating it. And in Singapore, you can make do because you have a lot of high net worth individuals. You can hustle your way to some angel checks. But
Correct.
when you start talking about like Philippines or
Nothing.
Thailand or Malaysia, it's much harder. You still have high net worth individuals, but the angel networks are not as strong.
Nope.
There's plenty of people that are working on it. I love the Middle Angel Investor Network.
Right.
There's people that are trying to work on that, but there's still in development. So for the startups, the options of having institutional capital are much fewer. So
Correct.
we have this geographic gap, we have this stage gap. And then the third thing that really prompted me was that we were in the natural evolution change of startup ecosystems, because the startup ecosystems had been operating for a while.
Yep.
We had the initial rails. But what happens normally is that startup ecosystems generally will start very consumer tech heavy, primarily putting out all of that. But then once that establishes, you start seeing the rise and development of enterprise tech. Yes. So if you think about, so like the woman that coined the term unicorn from Cowboy Ventures, Eileen, I can't remember her surname. When she initially did that research, there was something like 98% of the market value of startups were consumer tech. When she coined the term, that was back in like the 2010s or something like that. She updated the research like a year or two ago, and it was the complete switch. It was now like 97, 98% enterprise.
Right.
Now, the US market made that switch. When you look at other markets that are growing, whether you're talking about some of the European markets, the Indian market, any of the markets that have had more gestation period in order to nurture the growth of the startup ecosystem, have started to make that change. So I saw the same potential in Southeast Asia, but I also called out one of the challenges that I find on consumer is that it's very hard to cross borders. And Southeast Asia is a very heterogeneous collection of multiple countries.
Correct.
That you know, they're connected by geography, but the cultures are quite different between them. Philippines is very different than Thailand, is very different than Indonesia, is very different than Singapore, right? And it's even different when you start going city to city. Like somebody in Manila is going to be very different than if you go to Cebu.
Right.
The culture, the same country, culturally different. So consumer
they even
to
speak
me,
a different language.
Yeah. Consumer to me is very hard to connect these markets.
Correct.
But from my standpoint, because we had the foundational layers from e-commerce payments, to et cetera, we had the foundational layers. B2B, I think, transitions markets, geography, borders, etc., much more easily because the value proposition is the same. I don't have to think about personal taste preferences. I'm a company, I'm manufacturing, I need more efficient processes for inventory management, procurement, logistics, etc., etc. The value proposition stays much more the same. The go-to-market ends up being nuanced. So I saw this third factor of the natural evolution change that we're at the tipping point where we're going to start seeing the rise of the new generation of B2B tech founders. And that's those three factors are what prompted me to want to launch Indelible.
That's amazing. Now, last question before we take our first break. I love the thesis. And you're absolutely right, because it's similar to how cities just get gentrified, right? The first few funds, if they become successful, they deploy, they raise a new fund, then all of a sudden their check sizes do get bigger. And all of a sudden there's a big void at the bottom of the pyramid that nobody wants to write a 20K, 30K check. And that 20K to 30K check is the riskiest of all. But that's also what's needed in order for deep tech to happen, right? But also at the same time, and this is very, very, I only had the lens of the Philippines, right? As you go from the shift from consumer to deep tech, the founder market fit, there's a big void.
Yes.
My God. All right. So I'm coming in here as a 4-time startup founder, right? My first startup, weird enough, you just called my whole career, was a consumer tech. It was a nightlife app that gets people into the guest list of all clubs in Manila. And I caught them at the right time, where all the first few funds here, like the Kickstarts of the world, were still doing pre-seed. They were doing 20, 30, 40, 50K checks. And then all of a sudden they got burnt out. I think nobody survived, or just one or two. then they leveled up on their fund 2, fund 3.
Yeah,
right?
yeah.
My first
and now
startup,
want to do bigger checks.
no, they're playing at pre-A, Series A, Series B, Series C.
Yep.
How many startups even get to that, right?
You have to have that funnel to
Correct.
actually have enough pool of companies to fund at Series A.
Correct.
And if no one's funding seed and pre-seed, where are they all going to come from?
The funnel
They're not
looks
all going
like
to be
this.
bootstrappers.
No, it looks like a
it's like the
tube.
classic glass Coke bottle.
Correct. Or a test tube, right? So after that, then you see now things start to diversify. My second startup, my first startup failed, by the way. That's why I don't ever want to feel like that again. I started doing B2B. I realized my superpower as a founder is sales. And I can sell whatever the fuck that's out there. I also caught it at the right time. Chatbots. I bought the domain chatbot.ph. I was raising funds instead of a fund. Instead of a VC check, I got an acquisition offer. So 1 year after, it got acquired. But you're right, from B2C to then B2B SaaS.
Yep.
Right? But the pandemic, the acquirer got cold feet, didn't have the thing. They pulled the plug on Chatbot Philippines while I was running it 1 year before ChatGPT happened. Imagine if they just... But I went back to consumer with a B2B play. And now that my current startup is Podcast Network Asia. But this then exists in a world where, yes, okay, let's just say a lot of the funds in the Philippines now are operating at pre-A, A, and above, right? Some touch seed, but very, very few. Because if you look at it, I think the biggest problem that I see is that there's just not a lot of VC fundable like founders. Especially if you're trying to get into deep tech, because you cannot say I'm a SaaS or a deep tech or I'm an AI startup and you're just pulling one API functionality out of ChatGPT. You need to have real experience building B2B startups. Now, you can do it from scratch if you don't have, but you have to prove it with traction. And traction in B2B is only spoken through one metric. And correct me if I'm wrong, Kevin. It's MRR, monthly recurring revenue. Every other metric that you throw me does not matter. Your monthly recurring revenue.
So there's a couple of other metrics that I look at personally.
Yeah.
Which there's really three at the early days, three metrics that I care about the most. Which is MRR.
Yeah.
But I also care about the CAC payback period.
Got it.
Which is a blend of multiple metrics.
Got it.
Because like basically it's like the challenge in any tech or any business really is the cash flow mismatch.
Right.
Because like I have to pay all the money to build it, then I got to pay all the money to sell it, and now I have to wait to collect my money.
Correct. Especially in B2B, nobody pays on time.
Yeah. I mean, now if you're doing like SaaS subscriptions or something like that, then it can end up playing a little bit differently. But basically, I'm trying to find out how long does it take you to earn that money back.
Got it.
When do you produce enough margin off of those sales to justify how expensive it was to acquire that customer? And that's like a unit economics question.
Right.
Is it a viable business model if you have good unit economics?
Right. And unit economics, again, is just literally your margins, right? Yeah. If you don't know what your margin, if your gross margin and you say, yeah, I have gross margin of 10%, I already know you're selling it at a loss, right? Because there's not enough margin for you to be able to take on every other OPEX that's out there. And these are the metrics that if I look around, I'm sorry, there's just not enough quality founders that if you're really adamant on raising VC funding as a path to grow your tech startup, you need to be ready and fundamentally ready for this. And I think if you're a Filipino, at least the best way for you to learn that is to work for another startup that knows that's currently playing that game. Because if you're just going to approach Kevin and say, Kevin, I'm building this, fund me. I know you do early stage stuff and you do not have the metrics to show for it. Your CV does not reflect prior excellence in this field. It's virtually impossible for you to be able to get conviction from any IC to take a bet on you.
100% agree with that. I think the any VC is going to be looking at the risks that are relevant to the stage. And when you're talking about at the early stage, there's a couple of risks, which is, can you actually finish building it?
Right.
So oftentimes when you're early, you have like an MVP or something like that. Do you actually have strong enough technical talent to be able to build? And do you have enough vision to know what you're going to be building?
Right.
And then the other aspect is, do you actually understand the market? It's the market and sales risk of, will there be product market fit? Because at that point, you haven't proven it.
Yep.
Do I think that you are the ones and this product are the combination of you plus this product, founder market, I guess, that can actually go out there and find the fit,
right?
Which requires iteration. Like there's not very many startups I know that got it on their first attempt.
No.
And so like having gone through it or been at a company that's gone through it, it helps with the understanding so you know what you're getting into. Too many people, I think a generalized problem that I see across the region is especially on the sales side, because most of the folks that haven't been inside of a corporate or understand the buyer process.
Yes.
And just building a nice product and saying, oh, these corporates are going to buy it is not good enough. You have to understand like what's their approval process. You know, have you ever gone through vendor registration? Have you ever had to get a CFO sign off on your bill? Have you ever built something that rerequires integration? So now all of a sudden you have the CTO jumping into the conversation. Yeah.
Yeah. No, that's super amazing. Now let's take our last break, and when we come back, we want to do a deep dive over the portfolio of what you guys have built in Indelible Ventures, and of course the hot take of what do you think is going to happen? How do we survive and thrive in this current market, both as VCs and startup founders? But let's talk about that more after the break.
Hey hustlers, before we resume the episode, let me tell you a very quick secret. Do you guys ever wonder how we're able to consistently release episode after episode here in Hustleshare without missing a date over the past 3 years? Well, it's not just pure hustle, because I'm also running my podcast along with me running my startup full time. Now, for some of you who have listened to this podcast, you guys very well know that I created a startup that is designed to help the best podcasters in Southeast Asia to realize their full potential, which is called Podcast Network Asia. And over the past couple of years, we've achieved quite a lot in P&A, helping hundreds of podcasters create world-class episodes consistently. However, what we realize is that we are not really solving the real problem of all podcasters in the world if we're not going to productize the thing that we're very good at, which is helping podcasters solve the two main pain points of a podcaster, which is number one, nobody really likes to edit their own show. Especially if you're listening to your own voice. Just like me, I cringe a lot. Having to listen to my voice for 3 to 4 hours just to release a 1-hour episode. It's no fun. And then the other thing is that most podcasters, just like me, are absolutely clueless on how to properly grow their show, which is something that we have perfected in Podcast Network Asia. So we've decided to put this all in one product that helps any podcaster in the world create world-class shows that people will love and will continuously grow. And that's why we created Podmachine. Podmachine is the most affordable podcast subscription service that helps you with your podcasting needs. We've got everything from audio production, crafting designs, and marketing and growth support. So as a podcaster, you can now just focus on the thing that matters the most, creating great content for your listeners. So if you are an existing podcaster or someone that actually wants to create their podcast now, no need to worry. You got a founder's discount by listening here on Hustleshare. So sign up now at podmachine.com. And aside from the free trial that you're going to get as a new user, I'm throwing in another one free edit as soon as you sign up for just as low as $49.99 USD a month to start creating a consistent and world-class podcast. Again, that's podmachine.com and use the code Hustleshare to get your founder discount. So if you have friends that are podcasters and if you want to have a podcast just like this, y'all know what to do. So just go and talk to you guys in Podmachine.
And we're back from the break. We are still with Kevin Brockland. I love the conversation we had prior to the break and talked about, the state of the funnel in VC funding and also the founder market fit of a lot of startups. And they think that, just because I'm doing the buzzword of AI, I'm a hot topic. Dude, everybody says they have an AI play now. Okay. And I've seen cycles of this. A few years ago, it was fucking blockchain and whatnot. And, just change a buzzword. Everybody will use it. But Kevin, I want to start looking at your portfolio first. Because obviously, again, the venture capital is a game of fundraising. For those people who don't know, Kevin also fundraises a lot. In order to invest with you, he needs to convince high net worth individuals or funds to invest in his fund, which is Indelible Ventures, that you guys or whoever he will invest in will give the best returns for the fund out of all the other mid-risk, low-risk, and riskiest assets that person wants to invest in as well. Now, those people that you've invested in, Kevin, obviously built conviction over for you to be able to invest in them. And again, the mandate that I've seen and the pattern that I see is that you want to invest in B2B tech. But walk me through several of your investees and how did you find them as someone that you wanted to bet on or support in order to get to where they wanted to be?
Yeah. So when I launched, it was probably a little bit easier in order to get those first couple, because the first couple of investments that I made were companies that I had been mentoring and were quite close to. So I knew the founders, I'd been guiding them. They were used in my presentation materials when I went out and raised money. So it was I was pretty certain on where the first bit of money was going to go straight away.
Got it.
After that, to be honest with you, most of the times I have to build kind of a lead gen funnel, the same way that a startup has to have like a marketing funnel or some sort of lead generation. Yep. I have to do the same. I have to figure out how am I going to be able to find out about the coolest and most exciting startup before anybody else does.
Right.
Because I position as one of the earliest check writers in the companies.
Yep.
So I need to be able to find pathways to get to the founders before the big boys want to throw in their 7-figure checks.
There you go.
And so that oftentimes means that I'm active in the ecosystem. I'm putting my feelers out there. And the way that has worked the best for me is give first, get later. And what I mean by that is I've found that if I go into an ecosystem and I try and just help build it, people look at that as a positive actor. And then that starts getting a self-reinforcing cycle where you start developing more friendships and relationships with the other people that are in the market. And as you develop it, you can then start explaining what it is that you do. I can then start showing how I interact with people, as opposed to me just going in first time and being like, come take my money because I'm so awesome. Instead, I get a referral network because people will have seen me acting, behaving, operating, adding value, and so forth. And that helps on both counts. If I'm trying to raise for myself, when people see or people hear the activities and the efforts that I'm putting in,
love it.
That's a better signal that I'm someone that they would be interested to support. Because to be honest with you, most of the high net worth individuals that are in these markets that I focus on, they want to give back and do good for the communities that have given them the wealth and success that they've been able to generate.
Yes.
Now, mind you, they're business people. They don't want to lose money. But they also have the heartstrings that can get, that they want to make sure that there are positive impacts on the ecosystem as well. So they have more concern than just the sheer financial return.
Correct.
Every person that has wealth has many different options of where they could put it.
Yes.
And it's the job of the investors when we go out and raise that we need to tell them, why is it so important? What's the impact? Yes, I can make you a bunch of money, but not only that, I'm going to get you these other things as well, which is, strategic value, seeing that you're making positive impact. There's a number of different things. On the startup side, by being out there, I always say that smart people know other smart people.
Yes.
So if I can demonstrate and start developing relationships with some of the seniors that are in the ecosystem, that starts spanning out to where the referral network is very, very powerful.
Right.
Funny enough, one of the investments that I did in the Philippines, which is a company called Shoppable.
Yep, my man. Shout out, Carlo.
Yeah.
One of the nicest guys in the ecosystem, by the way.
And pure hustle.
Yes.
So, like, speaking of hustle, like the thing that won me over for him was pure hustle. Like it was a very familiar sort of like sheer of will, this is going to happen sort of personality. He understands the business, but he doesn't stop. Like he's pure hustle. But funny enough, I tell him and I joke with him because he is the first and the only time that I have ever made an investment in a company that I met at a speed dating at an event.
No way.
So we did one of the pitch events. I think it was Echelon in Singapore, and I met him there. I didn't make the decision right then and there. I think I probably took like 2 or 3 months, or I can't remember how long I took to make the decision. Because I don't pride myself on being rapid pace decision.
No, you have to take your time.
I'm a people first, so I want to get to know somebody, have a number of conversations. I'm not this sort of like make a decision by the end of the weekend sort of guy. But yeah. So I met him at that. But the thing that won me over was, one, the interactions over that course of time, demonstrating proof. Every interaction builds on the past interaction, showing constant forward momentum and showing constant hustle. So like when I meet a founder for the first time, and any founders that are listening should take note of this as well. Each subsequent conversation that you have with an investor, generally they're probably taking notes. They're marking down, what did I say to them? Where are they at presently? So when you come back for that second conversation, you're being benchmarked against what that last conversation was. Right. Did you improve? If I gave you a commentary about my thoughts about what could potentially be interesting, did you take it to heart? And you can come back, to be honest with you. Like, I have no problem if somebody comes back and was like, you know what, you were wrong. We looked at it. You were wrong because of ABC reason. That's fine. I like, my job is not to be right all the time. Like I see a whole bunch of companies. And so my value proposition is the broader view. I'm not a specialist. I'm not going to operate your business. But I'm looking for forward momentum. I'm looking for the signals that indicate that you can take market feedback and react fast and effectively.
And how do you cut through the bullshit though? Because again, I'm a founder, and I can smell bullshit from a mile away because I've done it too before. Yeah, and I realized like, hey, you know what? Through repetition, you can do again a lot of pattern recognition. And there's no founder in a startup ecosystem that would tell you, "Hey, Kevin, we're doing terrible." Yeah. Everyone will say, "Kevin, we're kicking ass. We're doing well." But how do you sift through the bullshit and get through the weeds of what real forward momentum is? Because again, a vast majority would bullshit waste your time too. And you can pretty sure you have a very good radar with that now. Right? Because you can actually just one look here, like, I already know what you're gonna tell me. Nothing much. But how do you sift through that and build conviction over the forthcoming interaction that, hey, there is something here?
Yeah. So like, to be honest with you, a bullshitter can smell another bullshitter. Like same as what you just got done saying. So it's like, don't try and pull my own tactics on me. Yep. Like I invented that game, right? And so there's a part of that, but there's also a part of like I'm investing early enough to where I'm trying to assess the frame of thinking. And so when I tell somebody, hey, I want to see your financial projection, I don't really care if you're telling me that it's going to become 100 million revenue business. Like you throw that up on a slide or a projection. I'm just going to be like, all right, that's pure BS. I don't really care about the output number. And I don't actually care about the output number.
Yeah.
What I care about when I look at financial projections is, what assumptions did you make? Do you know enough about your business that you broke it down to the component pieces? Because like I look at the startups as like you're doing a progression of science experiments. Does this work? Okay, cool. We just discovered lightning. We just discovered electricity. Let's put it in a bottle. And so that's what I'm looking for. And like, if you don't know what you're looking for, or if you don't make assumptions from the beginning, you have nothing to compare it against. Like you're just kind of like hacking away blind. And I think that kind of comes like, I don't know if you've heard the analogy, but like early stage is like getting dropped into the jungle, and you're just kind of hacking your way through. And if you're lucky enough, you find a dirt road, and like it's bumpy, it's windy, it may still get you to a dead end, but at least it's clear. So you have a more defined path. And then if you're lucky enough, that'll lead you to the highway, and you can go as fast as you want because it's entirely clear, flat, leading somewhere. And like, we're jungle phase, so like what I'm trying to understand is like, does the person understand, like, do they got a compass? Did they got the machete to cut down the brush? Like, do they have the tool set? You know what I mean?
Or do they know where the jaguar is so that they won't get eaten? Right?
Exactly. Yeah, you don't want to get eaten. You don't want to be somebody else's meal.
Right. No, that's amazing. But we're running out of time, and I wish I had more, but super duper amazing. But last few questions. There's this AI wave of everybody throwing away AI, and I'm pretty sure over the past couple of months, everybody's AI. But how do you sift through real AI and how it can be used to become to use a real business rather than throwing it as a buzzword just because everybody's using it so far?
Yeah, so I'll tell you the honest truth is it's a problem right now, because like I've been telling my own investors, and I've been telling a number of folks, like, we're right now in what I call like the first wave of the AI innovation in Southeast Asia. And we're lagging behind the West because the West in China is a little bit ahead of us. But we're in our first wave. And what that first wave mostly means is that people are just kind of slapping it onto an existing product, or they're just kind of putting a wrapper around it because they think that they have to. And like when I say that, I'm not intentionally trying. I feel like a lot of what I see is lacking depth. Like I feel like we're only scratching the surface. And I say this partially because like you can build a good business for today, but I'm more concerned about the future. And I'm trying to predict whether or not you can survive. I'm trying to create some sort of probability of you achieving a goal 5 years in the future or something like that. And so part of it is I think that this first wave hasn't really understood how much change AI is going to have on the future. Because like, I was just having this conversation earlier today with somebody. If you look at selling SaaS or software to a corporate, corporates generally have always had a build versus buy decision,
Right.
because how complicated is it, and how scale of a problem is it? How important is it to us? Should I build it myself, or should I just go buy a third-party solution? Now, with all of the tools, everyone's a builder. The complex, difficult problems are now easier to build yourself.
Correct.
So we're changing some of the dynamics in regards to the balance of the build versus buy. So we need to up our game in regards to the value proposition and how we create durability and defensibility of what we build. Not every company is specialized in being able to build. So even things that they have the tools for, they don't have the product design knowledge. They don't have the implementation knowledge. We need to start, what I'm trying to get out of people is more of an understanding of the change in what it means to be defensible, because ultimately the logic is still the same. Like, history doesn't repeat itself, but it certainly rhymes, sort of thing, is that you still want to be the cliche sayings of you still need to be sticky. And what I mean by that is, like, whatever you build, you want to make it hard to just rip and replace.
Right.
And how you do that, because a lot of things are becoming easier, is that you need to own workflows, own some of the data, be more deeply integrated, go vertical, go horizontal. I mean, there's a number of different iterations. You can get network effects. There's still a bunch of ways to get defensibility, but what that means, I believe, is different today than it was yesterday. The base aspect of stickiness, defensibility, those are still true, but what that means is different. The same way, like, what constitutes a minimum viable product? If you looked at what constituted a minimum viable product 10 years ago, 15 years ago, it's vastly different than today, because standards have increased. So where I'm trying to push startups now is our standards need to increase. And that's what AI should be doing to whatever it is that we're building, raising our standard in regards to product quality, in regards to how we're integrating, how we're servicing clients. Onboarding could be so smooth. Implementation could be so smooth if we leverage what AI can do. The amount of data and insights, like the future is still wide open. I'm exceedingly excited about it, but I think this first wave hasn't captured it.
That is amazing. Again, thanks so much, Kevin. I wish we had more time, but I know you have a hard stop. But before I let you go,
could rant and rant.
Oh, we can definitely do this, and I'd love to have you back on the show. But before I let you go, if people want to reach out to you again, pick your brains and whatnot, or again, show them what they're up to, where do they go and how do they do that?
Yeah, so I'm super active on LinkedIn. So I post like crazy basically every day. So you can find me on LinkedIn. That's probably the easiest, fastest way. If you want to shoot me an email, I try and respond to everyone. Hopefully you don't get caught in my spam folder, but that's kevin@indelible.vc. So if you can't find me on LinkedIn, drop me an email.
Please make sure you don't do a typo, because it will end up being Indelible Ventures, like what I did. It's indelible, like an ink.
Like the ink.
Absolutely. Now, again, Kevin, thank you so much. But before I let you go, follow us whatever podcast app you're listening to, whether YouTube, Spotify, or wherever you listen to podcasts. And if we did say some jargon or the email of Kevin, it's going to be found on hustleshare.com in its show notes. And if you also want to be one of our supporters and be the premium supporters of Hustleshare so that we can keep doing content like this for the past 6 years, we've been doing it, and we're never going to stop as long as I can talk. And maybe when I make myself an AI down the road, you'll be listening to an AI version of me. Again, please do support us at premium.hustleshare.com. Again, Kevin, thank you so much.
Thank you.
All right. And I'll see you guys in the next episode. Peace. And I'd love to have you back on the show. But before I let you go, if people want to reach out to you again, pick your brains and whatnot, or again, show them what they're up to, where do they go and how do they do that?
Yeah, so I'm super active on LinkedIn. So I post like crazy basically every day. So you can find me on LinkedIn. That's probably the easiest, fastest way. If you want to shoot me an email, I try and respond to everyone. Hopefully you don't get caught in my spam folder, but that's kevin@indelible.vc. So if you can't find me on LinkedIn, drop me an email.
Please make sure you don't do a typo, because it will end up being Indelible Ventures, like what I did. It's indelible, like an ink.
Like the
Yeah.
ink.
Absolutely. Now, again, Kevin, thank you so much. But before I let you go, follow us whenever podcast app you're listening to, whether YouTube, Spotify, or wherever you're listening to podcasts. And if we did say some jargon or the email of Kevin, it's going to be found on hustleshare.com in its show notes. And if you also want to be one of our supporters and be the premium supporters of Hustleshare so that we can keep doing content like this for the past 6 years, we've been doing it and we're never going to stop as long as I can talk. And maybe when I make myself an AI down the road, you'll be listening to an AI version of me. Again, please do support us at premium.hustleshare.com. Again, Kevin, thank you so much.
Thank you.
All right. And I'll see you guys in the next episode. Peace.